Good evening, traders. Welcome to your daily market explainer for August 17th, 2026. Look, if you're completely exhausted from sifting through noisy news feeds, panicked Telegram groups, and flashy financial TV just to figure out what actually happened on the tape today, well, you are in exactly the right place. We're going to cut right through all that noise, break down today's price action, and get you perfectly set up for tomorrow's opening bell. Literally, this single explainer is all you need to wrap up your trading day. Let's get into it. Okay, let's dive into this. Here's our agenda. We'll cover the market headlines, check out the top movers and shakers, tap into the Whisper Network, and wrap up with tomorrow's trading playbook. Section 1. The market headlines. Let's see exactly where the benchmarks landed. So, the bears? Yeah, they are stubbornly holding their ground right now. The Nifty 50 closed at 24,288 today, dropping 78 points. And honestly, the big takeaway you need from this is that it marks the index's fifth straight down day. It's just this slow, grinding bleed that's absolutely testing the bull's patience. The Sensex took a similar hit, shedding 281 points to close at 77,728. Meanwhile, Bank Nifty was kind of the lone soldier holding the line, finishing essentially flat near 57,687. We didn't see any massive sheer panic selling today, but man, there is a very obvious lack of buying conviction up at these levels. Now you might be wondering, why are we seeing this drag? It's because two major macro forces are currently pulling the market in entirely different directions. On one hand, we have the US dollar and the 10-year yield sliding. The market is pricing in a September Fed rate cut after some soft inflation data. You'd normally think a weaker dollar is great, right? But it actually caused the Nifty IT index to slip roughly 2% today. A weaker dollar hurts our Indian IT exporters through unfavorable currency translation and general demand worries. Then, on the other hand, we've got Brent crude firming up around $89 to $90 a barrel, thanks to persistent geopolitical tension in West Asia. That is a massive headwind for our oil marketing companies and keeps the RBI highly watchful on imported inflation. Section 2, Top Movers and Shakers. Let's pull up the F&O heat map. Now, what's really interesting here is how those macro currents actually play out on the tape. Look at the absolute massive momentum in the wind renewables space today. It spread like wildfire. INOXWIND led the entire pack, surging over 6% to close at 78. This is being driven by sustained brokerage optimism and an incredibly firm order pipeline narrative. And they definitely didn't run alone. Sector peer SUZLON followed right along, jumping over 4% to 49. Away from renewables, we saw incredible strength in the capital markets, with MOTILALOFS climbing nearly 5.7% to 955, just riding those buoyant cash volumes. Finally, OBEROIRLTY led real estate higher, closing up 4.6% at 1931, catching a serious bid on rate cut hopes and premium housing demand. But of course, gravity always catches up somewhere. Flipping over to the losers, VOLTAS took the biggest hit, dropping over 4% to 1267 on some really aggressive consumer durable profit-taking. We also saw BSC cooling off by 3.3% down to 33.32 on valuation concerns. But the most significant sectoral anchor today was HCL Tech, falling 2.5% to 13.25. Like we just talked about, that weaker US dollar and global growth derating fears are weighing heavily on the entire IT pack right now. We also saw Vodafone Idea drop about 2.8% to near 14, and Cochin Shipyard sliding over 2.5% to 14.58, which actually perfectly sets up our next segment. Section 3, the Whisper Network. Let's dive right into the unverified market buzz. Welcome to the water cooler, folks. This is where we look at the unverified scuttlebutt actively influencing price action. Let's kick things off with a perennial favorite that is once again lighting up retail trading forums. The big question buzzing today: is Vodafone Idea quietly prepping a massive fresh equity raise, or maybe further government stake conversions just to stay afloat? So we rate the probability of this rumor as medium. Why? Because this fundraise theme for Vodafone Idea has literally been telegraphed for months, even though nothing official has been filed yet. But the impact here, undeniably high and purely binary. If an official exchange filing actually drops, a large raise obviously dilutes existing shareholders, but it fundamentally de-risks the company's immediate survival. If you are trading this name, you absolutely need your alerts set for official exchange filings. Next up on the Whisper Network, we've got heavy speculation running through the defense PSU forums. The chatter is that Cochin Shipyard is sitting on a massive, unannounced new naval or defense order win. So the crucial point is how we handicap this risk. We rank the probability here as low to medium. Yes, the broader defense order flow is very real, but the exact timing and size of these specific rumors are totally unconfirmed. Retail forums habitually front-run these announcements. However, the impact would be highly positive. The stock was down today, but if a fresh order suddenly hits the tape, it will violently squeeze the short sellers. If you're short Cochin Shipyard right now, definitely size your risk appropriately. Finally, validating what we saw earlier on our gainer slide, SUZLON popped 4% today, backed by heavy buzz regarding fresh, large wind energy order announcements. This rumor directly fed into that massive momentum we saw with INOXWIND. While specific numbers are totally unverified right now, the overarching pipeline narrative for wind renewables is highly credible. Today's price action certainly supports the long thesis for anyone already holding the stock. Section 4, tomorrow's trading playbook. Let's look at the August 18th setup. All right, we've heard the rumors. Now let's distill everything into actionable intelligence. I need you to burn this number into your memory for tomorrow, 24,350. Based on official end-of-day data, this is the Nifty 50 max pain level for tomorrow's Tuesday expiry. It's the absolute key magnet level you need to watch. The highest call open interest, your resistance, is sitting up at 24,500, while the highest put open interest, your support, is down at 24,300. Expect some very heavy pinning action right around these zones. But wait, there is a massive trap waiting for the unwary tomorrow: double expiry danger. Do not forget that the BSE Sensex now carries its very own weekly options expiry on Tuesdays, running simultaneously alongside the NSE Nifty. This means you have dual index-level volatility to contend with. If you're trading zero-day options tomorrow, you absolutely must watch the max pain levels for both benchmarks, not just one. Also, a quick housekeeping note. We have a major ex-dividend cluster hitting the tape tomorrow, August 18th. Defense and PSU heavyweights, including Hindustan Aeronautics, Mazagondoc, and Rail Vikas Nigam, are all turning ex-dividend. If you hold these names, or if you're charting them, expect to see small ex-date price adjustments right at the open. Please don't mistake a mechanical dividend adjustment for a sudden fundamental sell-off. And this brilliantly illustrates how we tie everything together into our spotlight trade for tomorrow. Based on the sector leadership we saw today, the idea and focus is going long on Tata Steel. The metals pack was a clear standout today, up 1.4% in a totally down market. Let's objectively weigh this setup. On the catalyst side, we're seeing firm global metal prices, hopes for Chinese stimulus bidding up the sector, and that weak dollar tailwind we discussed earlier, which makes commodities priced in dollars cheaper globally. It is a fantastic fundamental setup. However, on the risk side, you've got to be incredibly watchful of any sudden global growth wobbles. If the narrative suddenly shifts from rate cuts are good to rate cuts are happening because the economy is breaking, high beta metals will get punished. Play the momentum, for sure, but manage your stops tightly. And that is a wrap on today's explainer. Think about it. How are you going to navigate a double expiry tomorrow with 5 straight days of nifty selling pressure breathing down your neck? You need focus, not noise. So do yourself a favor. Forget the bloated news channels, step away from the endless doom scrolling, subscribe to the channel, and hit the bell icon. This daily explainer is quite literally all you need at the end of every trading day to stay ahead of the game. Remember, this is my personal research for educational purposes only, definitely not investment advice. Always do your own homework. With a double expiry looming and metals catching a bid, the ultimate question is, will tomorrow finally break this 5-day losing streak, or are the bears just getting started? I'll see you all right back here tomorrow to find out. Have a great evening and trade safe.